Hello, this is Andrew Pancholi with a special report today on Sunday the 11th of April. I'm putting it out to all of you, but it's also going to supplement those of you who are regular followers of the market timing report. And that's because I feel this is one of the most critical weeks of the year 2021. And let me explain why. Earlier on this year, I published our year ahead report that all subscribers have, and this shows how war cycles are coming together. They show how a series of timelines that we use for recurrent events all come together for this year. And I feel that this particular week and this month is one of the big trigger points. Let me run through this in a bit more detail. The big picture and the most important point is that we do have significant timing cycles on several markets this month. Most importantly, I have some strong monthly cycles coming in on the US equity indices. This suggests that the bull market may be due to arrest at least, or at least stop its journey up, or we might even get some degree of correction. But also, we're seeing, readers of the present edition of the report know, there's some very strong cycles on the 30-year bond market coming in. There are also cryptocurrency cycles suggesting that we're at an important turning point right now on Bitcoin as well. And what I'd like to do then is just actually not recap, but show you some of these war cycles, why they're coming together, and where I see the trigger points to be. I'm just going to walk you through and give you an overview of the part that I wrote about war cycles, and I think you'll find it quite interesting. But the key point, as I say, is that we are in the window right now. So we've got a wheel within a wheel within a wheel, and we're in that smaller window right now, really starting today. And that window remains open till the end of the month, but this is a critical week. But just to give you a bit of background, and also, by the way, we are tying in with macro currency crisis cycles, which I think are likely to impact a little later in the year. But we can already see, we've already seen some big moves in the dollar and the commodity markets. And let's start off then with the war cycles. And the easy way to explain this is that if we start off in 2001, we've got the event of 9/11 taking place, where New York was hit, was attacked, the Twin Towers were brought down. It basically precipitated Gulf War II. Shortly after this, the United States, together with some of its allies, enters Afghanistan, and this in turn leads to the occupation of Iraq. But if you go back 10 years prior to this, the first Gulf War takes place, and this is when Saddam Hussein invades Kuwait. And of course, that happened in August 1990. Then in January 1991, Operation Desert Storm took place, where the British, combined with several other forces, went back to oust Saddam from Kuwait. But we can go back 10 years further from that to 1981. And this year saw basically the build-up to the 1982 invasion, Falklands invasion by Argentina, which brought Great Britain sending this huge convoy down into a war with Argentina over the Falklands. And the root cause of this really was about the oil resources that were around that area. And at the same time, America and other nations were intervening in Lebanon. So you can see that there is an increase in conflict cycles as we get to years ending in one. 1971 sees the United States fully deployed in Vietnam. India and Pakistan are at war, and the Middle East is unstable, with several events going on there as well. But we can go back another 10 years to 1961 in the Bay of Pigs, which was this invasion on Cuba, which did fail for America. So just bear that in mind. That was a tricky one, and that is a 60-year cycle. So 1951 sees the thick of the Korean War, and 1941, and that's about as far back as I'm going to take it for the time being, really sees America, who had remained neutral in the Second World War. America was attacked in Pearl Harbor, and therefore joins the Second World War. And as I pointed out, if you take 1941, add 60 years, 2001, these are they're 60 years apart. The 60-year cycle shows this is the only two times that America's been attacked on its own soil. But the story doesn't really stop there. We can move forward from 2001. And 2011 sees Allied intervention in Libya. Colonel Gaddafi is ousted and eventually captured and killed. So these work like clockwork, that we always get some heightening in geopolitical conflict. And 2011, add 10 years, takes us to 2021. There are also some bigger cycles. Just briefly, there's a 100-year cycle from Iran, a coup in Iran, So this is quite important. We're setting this against the backdrop of these super macro cycles. And one of the biggest ones of this is really relates to the 82 to 84 year cycle, which is one of revolution and change. If you've read 0 Hour, Harry Dent and myself collaborated over that. We show you revolution cycles, and they tend to break out every 82 to 84 years. Now, World War II broke out in 1939. So if we do the maths, add 82 to 1939, it takes us to 2021. It's an actually 82 to 84 year cycle. So, 2021 to 2023 sees us really in a window for a war cycle. So what we're seeing is the 10-year cycles are combining with the revolutionary cycle, and we are at risk. And within that, I use the micro forecasting system using mathematical data, very small, complicated cycles that we do for our proprietary software. And that suggests that this is one of the key windows we're at right now. And that's why I'm putting this report out. Let's cut to the chase. Take a look at this news story that's been simmering for a few days now. This is the BBC News website, and basically it talks about Ukraine. There has been a build-up of troops around the border between Russia and the Ukraine. Now, here is a timeline of aggression cycles, or just interaction cycles, between Russia and Ukraine. And I'm not going to go into a deep analysis of this, but suffice to say, if we go back to the 100-year cycle in 1921, Ukrainian Soviet Socialist Republic was established when the Russian Red Army conquers 2/3 of the Ukraine, i.e. there's a big event which involves Russia and the Ukraine. Let's then also head all the way back to 1941. So we talked about the revolutionary 82 to 84 year cycle, and what we see here is that is coming in. Basically there is a change in Ukraine as the Nazis occupy Ukraine. So you can see how these big cycles are coming together. These are we've got the 100-year cycle. Those of you who studied my work will be familiar with this, but we've also got the revolutionary cycle coming in. And also what we do see here is that as we enter the 1960s, the 60-year cycle has increased covert opposition to Soviet rule. So remember, Soviet Russia, what was Soviet Russia is presently triggering a standoff with Ukraine. The Soviet tanks, it's called Soviet, but the Russian tanks are amassing on the border. Most importantly, though, the 30-year cycle sees the Ukraine declaring independence following an attempted coup in Moscow. So you can see we've just got 3 or 4 very big cycles coming together, and that is why I believe that this is going to be a potential sort of hot potato, and in turn all this could trigger the markets, because oil and gas is a big issue, is a big commodity that comes from this area, and of course if we do get international instability, that will also impact the equity markets. So looking at the latest edition of the Market Timing Report, one of the things that struck me was the number of turning points we've got coming in April across a series of markets. As I say, the US equity indices have significant cycles coming together, although the pattern as yet suggests that we're still seeing higher highs and higher lows. So we might well be about to run out of steam. One of the things that really caught my attention, though, was when we look at the 30-year Treasury bond, we do see so for those of you who are not familiar, we create this predictive cycle system. It goes out into the future. We blank those out there. But wherever we see a large spike, we often see a reversal. And we've got a reversal here. Here we've got a reversal, another one here, another one here. If you look at this, this actually is equal to this one in magnitude. It's a very big reversal. So we're starting to see a bit of a basing pattern. This suggests that we might see a reversal in yields. So this suggests that we might see markets topping. And also we've got some strong Bitcoin cycles coming in as well this week. So the real message from this presentation is that the war cycles are coming together. We really are going to heighten towards the 19th of April, but the window opens now, but this stays open all the way through to the end of the month. So there's going to be a trigger point. My money is on the fact that there is going to be an escalation on tension between Russian forces and the Ukraine, purely because we've got these super long-term cycles coming together. And I think this is one reason why we really need to be on alert. Protect your positions, because we are approaching a reversal area. We're in a similar situation on gold, although it could go a bit lower before it reverts up, and crude oil as well as natural gas are industries that could be impacted by this conflict. So I hope this helps. I'm putting this out to all of you that are on our list. Feel free to circulate it to your friends if it helps people. The bottom line is, be on alert. I don't have a clear message for a definite guaranteed turn, but I think we're going to see the markets get more volatile very shortly. Thank you.